2 weeks ago, the US SEC approved the creation of Bitcoin ETFs. Now, you might be wondering, what are Bitcoin ETFs? Simply put, Bitcoin ETFs allows big institutions to be able to trade Bitcoin. But unlike Bitcoin Futures ETFs, which itself was launched in 2021, Bitcoin ETFs enables these big institutions to directly hold Bitcoin on their balance sheet. So investors can more easily gain cryptocurrency exposure. Now, what does this actually mean? Let's talk about why this matters and why it's going to be a major catalyst for the upcoming bull run. So let's talk about its advantages, such as ease of access. So investors can now buy Bitcoin ETFs from popular brokerages such as Grayscale, Fidelity, BlackRock, and any other broker that decides to file for a Bitcoin ETF. So let's talk about liquidity. Bitcoin ETFs can be traded by retail investors through regular brokerage accounts like the ones provided by the brokers I just mentioned. What this means for Bitcoin is that it opens up the door to way more people, such as big institutions who couldn't get their hands on Bitcoin before. They can now do so, and they are able to trade the assets, which brings more liquidity to the market. And basically, when there's liquidity, the price of the assets will go up, and obviously it will affect the rest of the cryptocurrency market as well. Which leads me to my third point, which is the fact that it's a spot-based ETF. The reason why this is a big deal and why it's going to be a major catalyst for Bitcoin and the entire crypto market's higher prices is that when any broker is approved for a Bitcoin ETF, anytime a regular or big investor buys a piece of that ETF on the broker's platform, that broker is required to hold an equivalent amount of that in Bitcoin. Now, in case if you still don't get the point I'm driving at here, what I'm saying is that these guys who are applying for Bitcoin ETFs are required to hold and buy Bitcoin. Because of the size of these institutions and the amount of customers that they have who could potentially buy the Bitcoin ETF, these brokers could take a lot of Bitcoin off the market. And the less Bitcoin is out there in circulation for people to buy, due to the law of supply and demand, it has the potential to push the price of Bitcoin much higher than it would normally go. This is why this is a big deal for the price of Bitcoin. And also, the approval of Bitcoin ETFs could lead to increased adoption of cryptocurrencies and further legitimize the cryptocurrency market. Now, just as there are advantages, there are also disadvantages as well. While there is clearly an upside to these ETFs existing, there are also some downsides to it as well, and some of those disadvantages of the Bitcoin ETFs include market volatility. As we all know, the price of Bitcoin can be very volatile, which could lead to significant losses for investors who get cold feet. And once they sell their portion of the ETF, the broker is not obligated to hold that Bitcoin anymore. And if a bunch of investors get cold feet and sell their Bitcoin ETF holdings, it could further drive down the price of Bitcoin. So you can see the same thing that makes the price goes up by these institutions buying a bunch of Bitcoin off the market, which could further increase its prices and send it much more higher. The same thing could go the other way around if a bunch of investors decide to get cold feet and sell off their Bitcoin holdings. Basically, what that happens is that the brokers will now turn around and sell all that Bitcoin that they took off the market back into the market, which will now further drive down the price of Bitcoin, because now, due to the law of supply and demand, there's now a bunch of Bitcoin available in the market. This is one of the major downsides of these Bitcoin ETFs. Alright. The second downside is counterparty risk. Bitcoin ETFs are subject to counterparty risk, which means that investors could lose money if the ETF's custodian, alright, that is the people that are holding the Bitcoin for the brokers such as Grayscale, Fidelity, and BlackRock, if they decide not to hold the Bitcoin themselves, they can decide to outsource that to a counterparty that will hold it for them. Alright. Some of these big institutions do so. They choose to not hold their cryptocurrencies by themselves. Now, if they decide to do that and that counterparty gets hacked or goes bankrupt, all that Bitcoin could be lost forever, essentially rendering the ETF worthless. Because if I hold a Bitcoin ETF and then the brokerage platform that I'm holding it with gave that Bitcoin to another counterparty to hold for them, and then that counterparty doesn't have the Bitcoin anymore, that means my ETF is worthless. Nobody is going to buy it from me. Nobody is going to sell it to me either, because it is now worthless, because what actually gave that Bitcoin ETF value is now gone, which is actually the Bitcoin itself. So once it's now gone, it has rendered that Bitcoin ETF worthless. So obviously that can now come back out into the market as a negative, and then can drive down the price of Bitcoin, because people will be trying to sell their Bitcoin ETF that they can't even sell anyways, because the Bitcoin that underlines that asset is now gone. This is why at the end of the day, you want to buy Bitcoin and hold it yourself. Which leads me to my third point, which is lack of insurance. Unlike traditional investments such as bonds and stocks, Bitcoin ETFs, at least as at right now, are not insured by the FDIC. So if that Bitcoin is lost or stolen, which I mentioned in my previous point, either by the broker or the counterparty, the investors of that ETF cannot get their money back. So all these are the negative aspects of investing in an ETF instead of buying and holding the Bitcoin yourself and storing it in a private wallet, which I would encourage all to do if you guys decide to eventually venture into the cryptocurrency market and buy yourself some Bitcoin. So all these negative news could bring the price of Bitcoin down. All right. So when people hear that one of these brokers that applied to get a Bitcoin ETF has lost all its Bitcoin, or they were hacked, or their Bitcoin was stolen, or simply lost due to either counterparty risk or them being negligent, this will drive the price of Bitcoin down. And not even talk about the market volatility when some of those investors that are invested in these Bitcoin ETFs decide to sell because of they got cold feet. All right. Once they sell all that Bitcoin, and they are a lot of Bitcoin, right? And then the broker now turns around and sells all that Bitcoin because they are not obligated to hold it anymore. They now sell all that Bitcoin on the open market. That could even further drive down the price of Bitcoin. Just like I have said, even though this spells a great news for the price of Bitcoin, it is important to also acknowledge the negative side of it as well. But I strongly believe that this will play a major role in the upcoming higher prices for Bitcoin in this upcoming bull run.